Hello, what's up, traders? It's Classing Trades here, the hybrid trader. You're once again welcome to my YouTube channel. Please, if you're new to my channel, take us some time to subscribe and like this video. Also, don't forget to share the video to your friends so it will help them as well. In today's video, I'm going to be talking about trend in the Forex market. And if you are a new trader or a beginner trader, this is the only video you need to understand how trend works in the Forex market. So I'm going to make it very snappy and not take much of your time. Let's dive directly to what we have to do today. So basically, trend refers to the direction of a particular currency pair at a particular time in the Forex market. So trend is just direction. And there are three main types of trend. Firstly, we have an uptrend. Secondly, we have a downtrend. And thirdly, we have a range or a consolidation. An uptrend is characterized by a series of higher highs and higher lows and indicates a rise in the market. On the other hand, a downtrend indicates a series of lower lows and lower highs, indicating a fall in the market, while a range has no definite direction, with price just moving in a narrow range. So what I'm going to be doing in this video is I'm going to be showing us practical examples on all these three type of market conditions. And I'm going to tell you what to do in case you have this particular condition and you want to trade as a new trader. So please take out some time to like this video. Don't forget to like the video and subscribe to my YouTube channel. So I'm going to go to the chart to show us a practical example on how an uptrend looks like, how a downtrend and a consolidation looks like. But before we do that, let's have a textbook structure of how an uptrend looks like. So like I said, an uptrend is characterized by a series of higher highs and higher lows, indicating that the market is rising or moving upward. And in other words, you can see that there are buyers in the market, because if they are buyers, they are going to obviously push price higher. And if you want to trade a market that is in an uptrend as a trader, for you to make money in that type of market, you as well need to also be a buyer. So the first thing that trend helps you to do is to have a trading bias. If the market or the currency pair you want to trade or the asset is in an uptrend, then you know that what you should be looking for a buying opportunity. If it's in a downtrend, you should be looking for a selling opportunity. And if the market is consolidating or ranging, all based on your strategy. For me, I'm a trend trader. If the market is ranging, I will not trade that type of market. So as a beginner, it's advisable you trade when the market is trending, either upward or downward. So let's dive back to our example. So this is an example of what an uptrend looks like, with the market going up, rising, or with buyers in the market. So if you have a market like this that has series of lower high, higher low, higher high, higher low, higher high. So all these trough and peaks are simply market structures. You can call them lows or highs. So this one down is called higher low. The one up is higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, just like that. So if you have a market like this, what should you be expecting? You should be expecting that the market has to come down again to form another what? Higher low, before going up to form a new higher high. So an uptrend simply means that the market at that time is rising, or there are buyers in the market. And for you to make money, if you are trading an uptrend, you need to also be a buyer. So this one is just a textbook example of what an uptrend looks like. Let's dive into the chart to see what an uptrend looks like practically. This is GBP USD. Let's look at the 4 hours time frame. Okay. Now, if you look at the current chart, this is simply just an example of what an uptrend looks like. Now, why is it an uptrend? It's an uptrend because we see that the market is what rising up, going up, and we see series of higher highs and higher lows. Now, beginning from here, we have a low here, we have a high here, we have a low, we have a high, we have a low, we have a high, we have a just like that. We have a low, we have a high, we have a low here, we have a high here. So just like that, the market is forming what series of higher lows and higher highs. Now, this is just a characteristics of an uptrend. And how do you trade this type of market? How do you trade it? It's very important you know how to trade the market when it is in an uptrend. Now, the first thing you need to know is that if the market is trending up, you need to buy. That should be your bias for the day. You need to be a buyer. Now, after knowing that you need to buy, the second thing you need to know is where to buy. You need to look for the best possible price or the best possible place to place your buy trade. So I'm going to be showing us how or where to buy if the market is in an uptrend. And we all know that if the market is trending up, it gives us series of higher low, higher high, higher low, higher high, higher low, higher high. Now let's see, for example, this is the market, and we have a market currently here, and we want to trade this market. Now, where do you buy? You need to wait for the market to pull back to give you what? A low. You need to wait for the market to pull back to give you a low before you can now place your buy trade. This is the best possible place to place your buy trade at these troughs. These are the best possible place to place your buy trade. So you need to wait for the market to pull back to give you a low for you to enter your buy trade, for the market now to what? Pump up to continue the trend in the prevailing direction, which is the upside, which is an uptrend. So basically, if you meet the market trending up, you need to wait for the market to pull back to give you a very good and a precise entry. So again, the best place to place your buy trades are on these troughs. And how do you get a trough? You just simply hold on for the market to what? Pull back and give you a trough or a low for you to what? Place your buy trade around here. So this is basically an uptrend, and this is how you need to trade an uptrend. Secondly, it's very important we learn how to draw a trend line, and we are going to come to that later on in the video. So now let's look at an example of a downtrend, and we are basically saying that a downtrend has series of lower lows and lower highs, indicating a falling market. So a good example can be USD JPY, that's the United States dollars, against Japanese yen. So this is a downtrend because the market's direction is falling, or they are bears in the market. You can see they are sellers in the market. The very first thing you need to know about a downtrend is that if you are trading a downtrend, you need to look for selling opportunities. Secondly, a downtrend is characterized by a series of lower lows and lower high. So you see something like this: lower low, lower high, lower low, lower high. So this is an example of how a downtrend looks like, with the market falling or prices falling, going to the downside, and there are sellers in the market. So for you to make money, you also need to be a seller. So the first thing you need to do when you come on your chart as a trader is, one, identify the trend of the market. And this is one of the reasons why market trend is very important, because market trend is going to give you direction. Because as traders, we trade direction. So market trend is going to give you a directional bias on a particular trade. So when I come on my chart, the first thing I'm going to look out for is what is the trend of the market currently. If the trend of the market currently is a downtrend, then I know that I'll be looking for selling opportunities. Secondly, I'll be looking for the best possible price for me to sell. If the market is in an uptrend, I'll be looking for buying opportunities, and I'll also be looking out for the best possible price for me to what? Buy. And if the market is ranging, we are going to come to that. You have another way that you can trade a ranging market. But generally, for beginners, it's very advisable that you don't trade when the market is ranging. There are about 28 different pairs, so many different pairs for you to trade, that if you look at one pair and the market is ranging, you can just simply switch to the next pair and trade. So this is a downtrend, and where is the best possible place for you to place your trade? So let's say the market is trending down like this, and you meet the market here. Let's say you meet the market here, and you want to place a sell trade. It's not advisable that you place a sell trade here, because the market can easily pull back. You can call it a pullback. The market will pull back or give you a correctional move. You get a correctional move to give you a new what? Lower high. To give you a new lower high before what? Going in the direction of the prevailing trend. So firstly, we have an impulsive move, we have a correctional move, impulse, correction, impulse, correction, impulse, and correction. So the best possible place for you to place your sell trade is at the peaks, at this high here, these lower highs. These are the best possible place for you to place your sell trade, because you cannot come and be placing a sell trade around here knowing fully well that the market will likely or give us a correctional move before moving to its original direction, because the market does not move in a straight line like this. No, the market does not move like that. The market moves in the form of a wave, So if your direction is not clear, it's advisable not to trade. But if your direction is clear that the market is in a downtrend, then the next thing that comes to your mind is, where can I sell this market? And the best possible place for you to sell is to wait for the market to pull back or to correct and give you a good level where you can place that trade. And that level is obviously at the lower high level. These peaks we see here, these are the best levels to place your sell trade, and that is for a bear market, or you can say a downtrend. So this is an example of a downtrend. You can see the market is trending downward, giving us series of highs, low, high, low, high, low, high, low, another high. And what are we expecting? What we are expecting is that the market should pull back and give us a low, give us a lower high, give us a lower low, just like that. Okay, just like that. So this is what we should be watching out for. The market has already given us a lower high here. So what we're waiting for is for the market to what? Sell again, give us a lower low. So this is the best place for you to place your sell trade. This level is the best place, because what are we expecting? We are expecting the market to what? To sell from this level to this level before giving us another high and giving us a low again, until the market has confirmed that it wants to change direction from a downtrend to an uptrend. And there are so many things you need to watch out for. If the market wants to change direction, the first thing you need to watch out for is chart pattern. like inverted head and shoulder if the market is selling. Secondly, we have pattern like we have the double bottom, which is like an M. You have a double bottom. Unless you see this chart pattern or you see a very good confirmation on a particular zone to tell you that the market is about to change trend from a downtrend to an uptrend, you should be selling in a downtrend and you should be buying in an uptrend. So it's very easy. The best place to place a sell trade should be here because we are expecting the market to push what? To push downward from this level. This is already a high that a lower high that the market has given us. So we are expecting the market from here to what? Push lower. So this is basically how to trade a downtrend. It's very easy. Sell at a good price and don't buy if the market is selling because they are sellers. Instead, be patient and wait for a good selling setup. So let's now move on to a consolidating market. Back to what we were saying, that a ranging market is a market that has no definite direction with price moving within a narrow range. Meaning that if you see a market that is ranging, you cannot determine whether the market is in an uptrend or if the market is in a downtrend. The market is just going up and coming down in a particular narrow range. For example, you see, let's look at this condition. Now, basically looking at this, you cannot really tell where the market is heading to, whether it's heading up or is heading downward. So this is a range. This is a range. And how do you trade a range? First of all, for you to trade a range and make money, you must be an experienced trader. So I'll advise beginners, if you are a beginner and you're watching this video, I'll advise you that if the market is ranging, do not trade the range. Rather, look for a market that is trending. Secondly, if you must trade, it's good you have an understanding of what we call support and resistance, which is selling from a resistance zone and buying from a support zone. So let's have this as our resistance zone and this here as our support zone. So if the market should get to this level, you can sell. The market gets here, you can buy, sell, buy, sell from here, buy from here, just like that, right? Until the market breaks above this level. So the second thing you have to do if the market is trending is to actually hold on for the market to break that range level. And this level is your support and your resistance level. If you don't know what support and resistance level means, then just go to my video and check what support and resistance level means in Forex. Now, this level up here is called the resistance level. We can see the ceiling. While the one down here is called the support level. Or we can say this is a demand zone and this is a supply zone. So if the market should break above this resistance zone, how do you trade? You should wait for the market to what? Retest this level before what? Buying. If the market breaks to the upside. And if the market should break this support level, you should wait for the market to come back and retest that zone before what? Selling. So the best place to place that trade is if the market has retested that level that you have previously drawn out there. If the market should retest that level, these are the best possible place for you to place your buy trade if the market breaks to the upside, or your sell trade if the market breaks to the what? To the downside. But it's very much advisable as a beginner for you to avoid a ranging market. And a ranging market is very simple. If you cannot tell the direction of the market is ranging. Because if you see the market going up, nobody needs to tell you that this market is in an uptrend. And if the market is going down, nobody needs to tell you that the market is what? Is in a downtrend. But if you cannot determine the trend based from looking at the market with your naked eyes, you don't need to do so many analysis on the chart to tell you that this market is not moving up, it's not moving down. Looking from the look, just looking from your eyes, looking at the chart, it just tell you that the market is not moving, it's not going up, it's not coming down, it's moving in a range or it's consolidating. And it's very much advisable to avoid this type of market.